Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 15th of July. I'm Daniel Lam, your host for the podcast. Volatility is a double-edged sword. On the balance of things, most investors would say that they dislike volatility. But you cannot deny that volatility does give opportunities. And the moves after the US CPI release suggest that volatility, and thus opportunities, do lie ahead in the near term. Now the US has now got 3 consecutive encouraging CPI reports, and core CPI's annualized 3-month rate of change is now down to 2.1%. The disinflationary trend in the US CPI continued in June as headline CPI dipped to 3% year over year, down from 3.3% in May, and core CPI declined by a tick to 3.3%. Now, very importantly, shelter disinflation finally emerged in the CPI data. Some of the deceleration came from a fall in the cost of hotel rates, but owner's equivalent rent and rent of primary residence grew at the slowest rate since the middle of 2021. Now, this data is consistent with Powell's testimony to the Congress last week, where he suggests that the case for interest rate cut is becoming stronger. Quoting directly from that meeting, "We are well aware that we now face two-sided risk, and the labor market appears to be fully back in balance." He continued to emphasize upon data watching, and this latest inflation data would add to the probability of a potential rate cut coming soon, perhaps in the September meeting. Now, the immediate asset price moves post-announcement was a classic buy the rumor, sell the fact, with US equities down, particularly the growth stocks, the US dollar index, i.e. the DXY, coming off, and bonds being bid, with US 10-year Treasury yield breaking below the key support level at 4.2%. Now, our proprietary technical model is suggesting that the US growth stocks are primed for a pullback in the near term. But we also see that the 18,900 level in the Nasdaq 100 is an interesting one to watch out for those who want to be entering or adding to the positions, particularly in the technology and communication services sectors, the 2 sectors that we're overweight on in the US. Now, in terms of fixed income, as we discussed in the podcast last Thursday, a Trump victory in the elections would be yield positive and bond price negative due to expectations of the ramping up of fiscal policies. So, this can provide potential entry points for investors on US 10-year Treasury bonds, knowing that the Fed is likely to be pivoting soon. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.